Olá, seja muito bem-vindo ao podcast de FundsPeople. Hoje é dia de lhe falarmos sobre investimento em infraestruturas. Para isso temos connosco o Rui Broega, diretor-coordenador da gestão de ativos do BIG e um profissional com uma vasta experiência em várias classes de ativos. O Rui vai estar à conversa com Denisse Kissner, é especialista de produto do AWS Global Infrastructure e vai falar-nos naturalmente sobre esta classe de ativos. Fique por aí. Rui, please, go ahead.
Thank you, Margarida. I'm really happy to be here today, talking about the investment theme that I really like at the moment, and I'm really happy also to have Denise with us, which is make part of one of the best teams. Investment teams that I know that are focused on the infrastructure thematic. So infrastructure is a huge and global asset class, in my opinion. We have more than $4 trillion in terms of market value, almost, according to my records, 400 companies. So with a huge dispersion, obviously a US market represents more than half of the market, but it is what it is. Europe and Asia is always a challenge in this environment. And my first question for Denise is, considering all the drivers that we recently have on the table, are we entering, or can we consider that we are entering in an investment super cycle or not?
Yeah, thanks, and thanks for the question. I mean, a super cycle, that's a huge word or huge phrase. However, yes, I think we see a lot of demand in the infrastructure theme, especially from the institutional side, and we see that also in our assets under management. We are currently managing more than 10 billion euros in global infrastructure securities, and also from the retail or wholesale space, we see a lot of interest now, especially after last year. I mean, last year with the COVID crisis and let's say the setback in the infrastructure cash flows, we see now a huge recovery. And I mean, it's a topic. It's a long-term topic for us with a long-term structural growth. And I mean, first of all, I would like to divide the infrastructure universe. I mean, you already mentioned it. The infrastructure universe is huge. Yeah, but you have to divide, or from our perspective, you have to divide between two different infrastructure companies. Yeah, so first of all, the infrastructure constructors, yeah, which are building the infrastructure, and the infrastructure operators or owners, yeah, which we are focusing on, because what we really want is the pure play, the pure beauty of the, let's say, this share class, and you can only provide this pure play if you are focusing really on the owners of the and the provider of the infrastructure, due to the fact that they have the investment in intangible assets. So the returns are normally inflation linked, so you have normally high barriers to entry for like airports, toll roads, railroads, etc. You have stable cash flows and income, and that's also very important in the current market environment. You have a really low correlation and high diversification effect versus the broad equity market. So I can give you some numbers maybe in the next couple of minutes. And all in all, you can really provide your investors attractive risk-adjusted returns, and also, let's say, a kind of a cushion in down markets. And we really focusing on this pure play, and our, let's say, definition of pure play is really that companies that generate at least 70% of their operating cash flows from directly owning or operating infrastructure assets are only part of our universe. Yeah, and so you really get with that definition really a pure play infrastructure investment instead of, let's say, a mixer or only a thematic theme.
Cool. And in your investment approach, the current environment is really a challenge, as you mentioned, and interesting. I would say that I will highlight three main drivers for this this asset class. So I would love to have your opinion on each of them, or in the one that you most pay attention at the moment. So let's say I see historically attractive valuations, not only in terms of, because this asset class lagged a lot in terms of performance, but also it's really interesting in terms of discounted valuations when we compare with all the different sectors of the MSCI world. Then probably the most important, or one of the most important, is the policy support from the governments across the board, also from the central banks, that probably will accelerate the investment activity, not only giving tax credits or subsidies or whatever. The most important is the low financing cost is, on my opinion, really important for this dynamics, at least at the beginning, to create the trigger to invest more. And the last one, for me, it's the so much called mega trends, which will probably accelerate more demand for this infrastructure and some specific segments on the infrastructure scope. How are you approaching the market nowadays, and how are you considering this on your investment strategy?
Yes. There are a lot of reasons for investing in infrastructure right now, but also in the long term. Yes, of course, it's a long-term trend. Yeah, so we really need the, let's say, the infrastructure in general, be it on the energy space, be it on the transportation infrastructure, be it the digitalization part of infrastructure. That's, of course, a long-term trend, with, let's say, superior growth expectations. But then, of course, also the spendings of the government, that's also very vital for us, especially the American job plan from Biden. Here the plan is to aim, or the aim is to close the infrastructure gap by directly investing into electric grid systems, renewables, clean water, transportation, and of course communications. So that's an additional driver for this trend. Then obviously, as you already mentioned, valuation. After this disappointing performance last year, with around minus 10% compared to the broad market, which was up by around 5%. We see here now, with, let's say, more normalization in the world, also from a valuation perspective, a lot of upside potential. So that's more the tactical part of the reasons. And then finally, of course, the interest rate environment, right? I mean, we do not expect an interest rate hike from the ECB or from the US from the Fed until 2023. And then maybe some slight interest rate increase. So here, that's also a good environment. Low interest rates are vital, and same is true for the inflationary environment. I mean, yes, we are talking now about inflation, and let's say higher inflation. I mean, we are talking about 2 to 3%. That's not too high, and most of the and here the advantage of this infrastructure owners is, first of all, that they have this real asset character because they own, the infrastructure, and secondly, they have normally inflation linked. Most of them have long-term inflation linked contracts with their clients. So that's also that's also, and you have seen that also in the years before, or in the decades before, in an inflationary environment, the performance of infrastructure securities was or outperformed the broad equity or global equity market.
Yeah, that's a good point. You mentioned the inflation scares. I would say that following this pandemic, the huge plans from central banks and governments have aggressively stimulate the economies. At least we hope that aggressively they stimulate that and help that stimulation. The likely result will be for sure inflation at some point. I don't know if we are already experienced that, as the market apparently is saying. But so it's inflation and growth that we are expecting with that. In these type of environments, typically people felt a bit scared about investing in equities because of the correlation with the movement in interest rates.
Yeah.
Particularly the infrastructure segment is as a really interesting trade-off in these environments. Can you talk about a bit more on detail? How do you approach and incorporate this different dynamics or risks in the future on your investment strategy?
Yeah, so basically we are investing really from a bottom-up approach, so not really from a top-down approach. However, what we also include into our fundamental analysis and as well in our, let's say, portfolio construction. What we also use is that's called quadrant model. So so we have 4 different, let's say, environments, or let's say economic cycles, or let's say environments. So in the first quadrant, when growth is accelerating and inflation is decelerating, so we have other companies in our portfolio, or overweighting other companies in our portfolio. Then when we have, let's say, growth accelerating and inflation is also rising, so then it's more that commodity-linked infrastructure companies are performing relatively well. And when we really see, let's say, decelerating growth and inflation is also coming down, then we are focusing more on the defensive names of infrastructure. And last but not least, when we have decelerating growth and rising inflation, then also we are combining more defensive low beta equities combined with also commodity-linked infrastructure companies. So it really, let's say, beside fundamental analysis, it's really vital to have really the focus on the current, let's say, cycle or economic cycle. And here then we decide if we have an overweight in the one part of the infrastructure bucket or in the other.
Well, the impact of increasing interest rates depends on the reason for that increase. Sure.
Yes.
But also it depends on the type of asset that you might choose for your investment portfolio. So that goes to regulated assets, or what I call user pay assets. I don't know if that's the designation. Which one are you more focused, or you felt more there are more opportunities to explore?
Yeah, it's really vital to know the reason behind rising interest rates, right? Is it rising yields due to higher inflation, to better growth expectation or rising GDPs, or is it really an interest rate hike? However, normally from a valuation perspective, and also when you look into the last decades here, if you really have a jump on in the interest rate or in the yields on the longer end, it's normally normally underperforming. Let's say these bond proxies are normally underperforming the broad equity market. But it's really interesting. I mean, at the beginning of the year, we have seen rising yields on the longer end due to this higher inflation, and it was really interesting, because for the first time we have really seen from a valuation perspective, due to this high valuation of the Nasdaq companies, that here we have seen a more, let's say, interest rate linked in terms of valuation compared to the broad equity market. That was really, really interesting to see. However, when we have really higher interest rates, you should focus more on let's say the energy infrastructure, as well as transportation infrastructure, because especially the communication part of infrastructure, like tower companies, they have a long duration on their contracts, and here you have maybe some setback then to then lower valuations. So if we see rising yields on the longer end.
Cool. So next question is obviously, where do you see opportunities to invest? Not only risks, but also let's talk about the good things. Where are the opportunities?
Yeah, I mean, as I mentioned, there are a lot of opportunities going forward, and we have we divide, or we differentiate our universe into 4 main buckets. So, which means transport infrastructure, energy, communication, and last but not least, utilities. And from a short-term perspective, from a valuation perspective, and from a recovery perspective, we see a lot of opportunities in the transport infrastructure space, due to the fact that the traffic volumes have bottomed. So we expect a recovery here, especially when we see reopening, also in the airport space. I mean, airports had the hardest hit during the financial during the COVID crisis. So here we really think that we see here the biggest rebounds, and also for toll roads, we expect here also a rebound, and and here we see selective opportunities. So yes, this could be a good opportunity. In the energy space, I mean, here we also see that volume starting to recover with positive year-on-year rates. So also here in the pipeline universe, here and there, we see some opportunities. But here we are really focusing also on mainly on these names with a higher ESG rating. And here we are quite confident that we're also seeing rising dividend yields, or let's say dividend growth going forward. In the long term, obviously, I mean, digitalization is the infrastructure trend, and of course here long term we see the largest structural growth. However, from a valuation perspective, as well as from current market environment, yes, long term, it's a great trend, but currently we are a little bit cautious on that side. And yeah, the last part of our portfolio, the utilities here, these are, let's say, the winners, or one of the winners in the transmission going green. So from the Biden plan, so also here the greener utilities, here we are really focusing on, mainly in the US. In the European utilities, I mean, we already talked about that last week. It's you have huge valuation gaps. Yeah, on the one hand side, in Europe, you have 100% green utilities with a multiple of 60, and on the other hand, these companies which are on the way to a greener utility, which are trading at an 18th multiple. So yes, when we are focusing on Europe, then more on these companies which have the way to go, so to say, and not the 100% green utilities due to this pretty high valuation.
So you mentioned, let's say, the transportation segment as a back to normality play. But you also mentioned digitalization as a next generation trend. I know that you guys, that your team runs two different buckets, and the most recent one is exactly the next gen. Can you talk about a bit more on both strategies? Yes. And or segregate the differences between in the investment style, and which type of sectors do you pay more attention in the next gen, on the opposite side with the more traditional structure?
Yeah, in the traditional one, it's really pure play infrastructure with these four buckets. In the next generation infrastructure, here we're really focusing on the next things in terms of infrastructure, which means we're focusing on data management, e-commerce, smart mobility, smart grid, social infrastructure, and also renewables. And I mean, we launched that fund or the strategy in 13 months ago. Yeah, almost 13 months ago. And last year, you have seen here this huge trend to digitalization, and also a great performance in that fund. Completely different to the global infrastructure fund, which was down by 10%. However, this year, it's really the other way around. Yeah, so global infrastructure is up by more than 16% in euro terms. While the global the next gen infrastructure that gives you also, yeah, the let's say the outcome or the results are really different if you are really focusing on this pure play or on this more, let's say, thematic digitalization approach. Also the overlap is not that huge. Yeah, so what you really can do also is combining these two strategies into your asset allocation. That makes a lot of sense. Yeah, but it's more the global infrastructure fund has a lower beta compared to the broad market. It's more defensive. When, let's say, more traditional equities are outperforming the broad market, then global infrastructure is able to outperform the broad market as well. When you have, let's say, more IT thematic, momentum-driven performance in the broad equity market, the next generation infrastructure is able to outperform the broad equity market. So all in all, it's a good combination in the asset allocation to cover both long-term trends, yeah, And from that point, I think it was also a right timing to go really this next step in terms of infrastructure. But from the investment approach behind, and also the fundamental analysis, etc., and also from the team, it's 100% the same, while the portfolios are not really completely, but really different in terms of sector, or let's say in terms of subsector of the subsector base, I would say. Yeah.
Just one more question regarding the geographical dynamics.
Yeah,
we see that obviously US is it's been the biggest player in the market. How do you see evolving these dynamics between Europe, Asia, and US in the future? Are we still a whole continent to absorb new dynamics in this thematic?
From a country, I mean, our country and sector allocation is really coming from the fundamental analysis. However, of course, the US equities have the largest part in our portfolio, but compared to the broad equity market, we are, let's say, still underweighted. Yeah, because when you look into the broad equity market, the MSCI World, I mean, it's crazy. You have 65% US equities. Yeah, 65%. We used to have 40 or 42. Tremendous outperformance of the US Nasdaq. Yeah. In the Global Infrastructure Fund, we have around 50% US, and due to the pipeline companies, around 10% Canadian companies in it. So we have a little bit more emerging market and Europe exposure compared to the broad equity market. And I think going forward, we are a little bit more diversified in terms of countries and in terms of continents, so to say. And for the next generation infrastructure, that's here is a huge difference compared to the broad equity market. I mean, we are talking about 65% US in the MSCI World, and in our next generation, it's much more centered in Europe. So we have only 33% US exposure and a lot of European companies in it, mainly Spain, Great Britain, but also in Asia, Australia, Singapore, etc. So it's broad, diversified in terms of countries and then also in terms of currencies. Yeah, and this trend, I think we see a trend more to, let's say, Europe and especially to emerging market in the infrastructure space. But of course, the core investment universe is still the US.
Yeah, I agree. So Denise, thank you. I think we pass on the main themes regarding this asset class. We talk about the main drivers that will support the interesting moment of this infrastructure thematic. We pass the eyes on the inflation impact, which is not necessarily a negative driver for this asset class, let's say. And also, we spent a few minutes talking about the old infrastructure model and the new one, which are the different dynamics. I think it was a really interesting session, and I would like to thank you again for your time to share your thoughts on this thematic. I would also like to thank you, FundsPeople, for the invitation, and I think I can talk in my name and also in Denise. it was 30 minutes of good chat, and I hope you guys felt interesting also. So thanks a lot for your time, and
thank
see you
you.
next time.
Thanks.
Bye-bye.
And yeah, goodbye.